Hey guys, it is Julie here with TipRanks. In today's video, we're taking a look at 3 stocks that were recently purchased by Soros Fund Management, the hedge fund founded by billionaire George Soros back in 1970. Soros Fund Management has earned an annualized return of 33% from 1970 to 2020, making it the most successful firm in history. Soros' biggest single success came in 1992 when he broke the Bank of England. He had taken a short position on the pound sterling, leveraged to $10 billion, and when the pound fell in response to changing politics, he personally made $1 billion in a single day. So when he picks a stock, people take notice. So today we're looking at 3 companies that all come in with a strong buy rating from analysts and were picked up by Soros Fund Management in this last quarter. Just before we get into these 3 companies, this is your friendly reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Don't forget to check out the TipRanks Instagram page for other great stock-related content. The link will be in the description down below. Okay, now let's get into these 3 stocks, starting off with Farfetch. They trade under the ticker FTCH, currently priced at $45.52 per share. Farfetch is an online retail store focusing in on luxury goods and brands. Their mission is to be the global platform for luxury fashion, connecting creators, curators, and consumers. They operate a modular end-to-end technology platform purpose-built to connect the luxury fashion ecosystem worldwide, and are the only truly global luxury digital marketplace at scale where lovers of fashion anywhere in the world can shop for an unrivaled range of incredible products from the world's best brands and boutiques. Like many tech-oriented companies, Farfetch had been operating at a loss, but in this recent Q1, they made an abrupt turnaround to profitability. Their Q1 earnings report showed an after-tax profit of $516.7 million, compared to a year-ago quarterly loss of $79.2 million. The company disclosed that this gross profit included a one-time $660 million non-cash benefit arising from lower share price impact on items held at fair value and remeasurements. Total revenues from operations was reported at $485 million, up 46% year over year, and higher than the $457 million analysts had expected. One key metric, the gross merchandise value of orders processed over the company's platform, rose 49% year over year to $915.6 million. In Q1, Soros Fund picked up 125,000 shares of Farfetch for a holding now worth about $5.5 million. Now, one analyst covering the stock is 5-star analyst Stephen Zhu from Credit Suisse. He says that we have a favorable view toward the company, maintaining the adjusted EBITDA guidance as Farfetch will reinvest the higher top-line contributions toward customer acquisition, supporting long-term adoption rates. We model approximately 700,000 new customers for 2021, 600,000 for 22, and beginning in our 23, our expectations are also unchanged at 1.2 to 1.5 million. Now, the Farfetch stock does currently have 8 analyst ratings altogether, and it does come in as a strong buy. That is based on 6 buy ratings and 2 holds. The average price target of $60.63 would be a 33% upside potential over this next year. Looking at our detailed list of analyst forecasts, we do have 3 that come in at the $45 price target, which would currently be a slight downside. The rest are all fairly bullish, with multiple ratings coming in these last few weeks. They range between 21% to 82% upside potential. The second company on our list today is actually quite new to the public market. That is Coursera. They trade under the ticker COUR and are currently priced at $37.34 per share. Coursera is a massive open online course provider. This niche leverages the size and reach of the internet to make a wide range of top-line university courses available to the masses. Coursera is a leader in the field, and since its founding in 2012, it has made available more than 4,000 courses from over 200 universities in more than 30 degree programs and at a lower cost than in-person classes. Through Coursera, students can take classes at such top-level schools as Imperial College London, University of Illinois Urbana-Champaign, University of Michigan, and Johns Hopkins. The company boasts that over 77 million students have used its services. They also have Coursera for Business, which offers world-class training and development programs for companies. They're used by some big names like L'Oreal, P&G, and Novartis. The company held their IPO at the end of March, selling over 15.5 million shares at an opening price of $33. Their IPO raised them $519 million. At the beginning of May, they released their first earnings report as a publicly traded company. The report showed $88.4 million in total revenue, a 64% gain year over year. The company's gross profit at $49.5 million was up 71% from the year-ago quarter. Seeing the opportunity in this new stock, Soros Fund picked up 105,000 shares for a position worth about $4 million. Covering the stock is five-star analyst Ryan McDonald from Needham. He says that given the increasing role of automation, the widening skills gap, and the shift to online learning, we believe Coursera's comprehensive platform will help it gain share in a large total addressable market that we size between $47 and $50 billion. While the COVID-driven tailwind to registered learner growth in fiscal year 2020 creates a difficult consumer segment comparison in 2021, we believe Coursera's efficient GTM motion and shift towards higher value enterprise and degree offerings can drive durable 25% plus growth and gross margin expansion. Coursera's stock picked up 14 analyst ratings, and it comes in as a strong buy based on 12 buy ratings and 2 holds. The average price target of $54.67 would be an upside potential of 46%. Many of those analyst ratings fall within that median range of 44 to 55%. On the low end, we have one hold rating with an upside of just 1.7%, and on the high end, a couple price targets at $60, which would be a 60% growth potential. And third on our list, we move over to Sotera Health. They trade under the ticker SHC and are currently priced at $24.30 per share. Sotera Health is driven by its mission, safeguarding global health. Along with their 3 best-in-class businesses, Sterigenics, Nordion, and Nelson Labs, they are a leading global provider of mission-critical end-to-end sterilization solutions and lab testing and advisory services for the healthcare industry. Sotera's businesses cater to more than 5,800 health industry customers in over 50 countries. The company boasts 13 labs capable of carrying out more than 800 tests and 50 sterilization facilities. Sotera's customer base includes 75 of the top 100 medical device makers and 8 of the top 10 pharmaceutical companies. Sotera Health just went public in an IPO of November last year. They sold over 53 million shares and raised $1.2 billion. At the beginning of this month, they had their first quarter earnings report. Their net revenue for Q1 was $212 million, up 13% from the year-ago period. Their net income showed a strong gain, turning around from a 1 cent per share loss to a 4 cent earnings per share profit. They also have been working assiduously to bring down debt levels, and in their first quarter report stated that they had a total debt of $1.87 billion and available cash of $108 million. In the first quarter, Soros Fund took a new position in the stock of about 180,000 shares for a value of about $4.3 million. One analyst covering the stock is Tycho Peterson from JP Morgan. He says that the first quarter results were generally strong, and although guidance remains unchanged, it should provide a pathway to upside for the balance of 2021 as we continue to be fans of the company's diversified operating platform, sticky multi-year contracts, efficient pricing strategy, and high regulatory oversight, altogether supporting its wide competitive moat with FCF to support deleveraging. Sotera Health has 8 current analyst ratings, and it comes in with unanimous buy ratings. The average price target of $31.75 would represent a 30% growth potential from current prices. On the low end, we have a price target of $28 from Citigroup, which would be a 15% upside potential, and on the high end, we have a couple price targets at $35, which would be 44% upside potential. So there are 3 strong buy stocks recently picked up by Soros Fund Management. I would love to know, have you heard of any of these 3 companies? Were they on your radar, or do you own any of them already? Let me know your thoughts in the comments down below. I always love hearing from you guys. Please keep in mind that these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes. Please make sure you're always doing your own research and due diligence before making any investment decision. If you made it all the way to the end here, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Thank you guys so much for watching. I hope you have a wonderful weekend, and we will see you back here next time.